The SIDU space stock I shared with you just weeks ago is now up 200%, and it's making subscribers serious money. But here's what's even more wild today. I have 3 penny stocks that could deliver even bigger returns. Before you think this is penny stock nonsense, I need you to understand something. These companies have real contracts, real government partnerships, and real catalysts that could send them skyrocketing. Stick around because we're breaking down exactly which 3 stocks I'm personally buying in 2026. Welcome back to Velocity Stocks. I'm Sterling, and this channel is built on one mission: finding undervalued stocks before Wall Street catches on. If you're new here, hit that subscribe button right now and turn on the notification bell. We drop analysis like this every single week, and you don't want to miss it. Today we're diving into 3 opportunities that could deliver life-changing returns. Let's get into it. Before we jump into these 3 stocks, we need to talk about why penny stocks are absolutely exploding right now. Here's the macro picture. When a stock is trading under $1, or even under $50, something magical happens with percentage returns. A move from $1 to $5 is a 400% gain. A move from $3 to $10 is a 233% move. That's the power of penny stocks. The absolute dollar movements are small, but the percentage gains are massive. Now here's the critical part. Most penny stocks are junk. They're shells with no revenue, no business model, nothing. But some penny stocks are actually real companies with real revenue, real contracts, and real partnerships. The 3 stocks we're analyzing today are in that second category, looking at AI, defense, and fintech sectors. These are the 3 hottest areas right now, and there are legitimate opportunities trading at depressed valuations. Stock number 1, IREN Energy Limited, ticker IREN, trading on the NASDAQ at $37.77. Now, IREN Energy is an AI infrastructure company specializing in data center development and cryptocurrency mining operations. The company was founded in 2018, is headquartered in the United States, and employs 257 team members. Here's what makes IREN absolutely critical right now. IREN Energy operates AI data centers that are absolutely essential for training large language models and running artificial intelligence workloads. Think about it, every company in the world needs computing power to build AI. IREN Energy is positioned to be a mission-critical supplier. The catalyst is massive government contracts and enterprise partnerships. We're seeing unprecedented demand for data center capacity, and IREN Energy has the infrastructure positioned perfectly. So the company is also benefiting from the AI infrastructure boom, where data center companies are seeing exponential growth in orders and revenue. Look at the price action. IREN hit an all-time high of $62 back in October 2025. It's now trading at $37.77. That's a 39% pullback, which is creating an entry point for investors. Over the last 6 months, the stock moved from $5 to $76. That's a 1,420% move. The volatility is there, the momentum is real, and the fundamentals are strengthening. Market cap is $10.9 billion, with average volume of 35 million shares daily. That's excellent liquidity. If this stock breaks back above $50, we could see acceleration. Conservative target, $50 to $60. Aggressive target, $100 plus if the AI infrastructure boom intensifies. Stock number 2, SIDU Space, ticker SIDU, trading at $3.14 on the NASDAQ. Now, this is a completely different animal. SIDU Space is a space technology and defense contractor. Founded in 2012, headquartered in the United States with 104 employees, they develop satellites and space-based technology for commercial and defense applications. Here, SIDU Space is absolutely positioned for an explosion. The defense sector is booming right now. Global defense spending is increasing. Space-based defense systems are becoming critical infrastructure, and companies developing satellite technology are in high demand. SIDU Space has government contracts and partnerships that position them perfectly for this shift. The catalyst here is brutal honesty. Look at the price history. This stock hit $600 back in June 2022. It's now at $3.14. It's a 99% decline. But before you run away, understand that penny stocks can be manipulated, diluted, and destroyed. However, SIDU space has pivoted to focus on real defense contracts, and we're seeing early signs of turnaround. The current price of $3.14 is close to the one-year high of $3.50. The stock bottomed at 65 cents 6 months ago. It's a 380% move from the low. Market cap is $204 million. It's speculative, but the catalysts are real. Government contracts, space technology demand, defense sector tailwinds. If SIDU space executes on these contracts, the stock could easily see $5 to $10. Conservative target $5. Aggressive target $15 to $20 if contracts accelerate. Stock number 3. INTR & Co., ticker INTR, trading at $8.48 on the Nasdaq. This is the fintech play. INTR & Co. was founded in 1994, is headquartered in the United States, and employs 3,235 team members. This is actually a much larger company than the first two. Here's what INTR & Co. does. They operate digital financial services platforms. Think payment processing, digital banking, financial technology infrastructure. In the age of digital transformation, companies that enable digital payments and banking are absolutely essential. The catalyst is positioned perfectly. Fintech companies are experiencing rapid growth as consumers and businesses shift to digital financial services. Interest rates are stabilizing, which creates better profitability for fintech platforms. We're also seeing consolidation in the fintech space, which creates acquisition opportunities. Look at the price action on INTR. It hit an all-time high of $9.50 back in November 2025. It's now at $8.48, just 7% below the high. Over the last 6 months, the stock moved from $7 to $10 steady, consistent growth. 1 year ago, it was at $4. That's a 112% move. Market cap is $4 billion with average volume of 2.25 million shares daily. This is the most liquid of the three on a dollar basis, meaning you can get in and out without moving the market significantly. What I like about INTR is the balance between growth and stability. This isn't a lottery ticket like SIDU space. This is a real company with real revenue, real profitability, and real growth. The risk is lower, but so is the explosive upside potential. Conservative target, $10 to $12. Aggressive target, $15 to $18 if fintech consolidation accelerates. Okay, let me break down why you might choose each one. IREN is the play on AI infrastructure. If you believe AI is going to reshape the economy and it is, then data center capacity is going to be mission critical. IREN is the most liquid and has the highest market cap of the three. SIDU is the most speculative. This is a penny stock that's been decimated but has legitimate defense contracts coming. If government spending on space-based defense accelerates, this could see explosive growth. This is also the highest risk. INTR is the balance play. You get fintech exposure with a real company, real revenue, and real fundamentals. This is the lowest risk of the three, but also potentially the lowest explosive upside. Now here's the critical part. All three of these are highly speculative positions. SIDU is literally a penny stock. IREN and INT are under $50. You could lose your entire investment in any of these. I'm not a financial advisor. This is not financial advice. I'm sharing research and analysis based on publicly available information. Never, and I mean never, invest more than 1 to 3% of your portfolio in any single penny stock. These are volatile. These can move 30 to 50% in a single trading session. If you can't stomach that volatility without panic selling, these stocks are not for you. Do your own research, read the SEC filings, understand the balance sheets, look at revenue trends, understand the competitive landscape. Don't just take my word for it. Make your own informed decision based on your risk tolerance and investment thesis. The catalysts I mentioned are real, but execution is uncertain. Government contracts might not materialize. Partnerships might not pan out. The companies might dilute shareholders. The market might not care about the fundamentals. These are real risks that deserve serious consideration. Let me recap the three stocks we covered today. Iris Energy at $37.77 for AI infrastructure. SIDU Space at $3.14 for defense and space technology. And INTR & Co. at $8.48 for fintech. These are my personal portfolio picks for 2026 because I believe in the catalysts. I understand the risks, and I'm positioned appropriately. But understand, These are concentrated, speculative bets. Conservative price targets. IREN. $50 to $60, a 32 to 59% move. SIDU. $5, a 59% move. INTR. $10 to $12, 18 to 42% move. Aggressive price targets. IREN. $100, a 165% move. SIDU. $15 to $20, a 378 to 537% move. INTR. $15 to $18, a 77 to 112% move. Here's what I need from you. Hit that subscribe button right now. Comment below and tell me which of these 3 stocks you think has the most explosive potential. Hit the like button. It helps our algorithm reach more investors. Check the description for links to SEC filings and additional resources. Remember, do your own research. Invest with discipline. Manage your risk. Only invest money you can afford to lose completely. Never chase FOMO. Never invest based on emotion. Next week, I'm covering the 3 defense stocks that just won government contracts worth billions of dollars. You do not want to miss that analysis. This is Sterling from Velocity Stocks. Let's catch these stocks in motion. I'll see you in the next video.